Okay, when we look at the Nasdaq 100 and the S&P 500, I'm telling you right now, we're ready for some fireworks when we look at this broad market right now. And also the Dow. The Dow is one of the leading indicators of what's happening. So let's really jump into where we're at. So first of all, the breakout point of what we're watching for is right here, 1969. It's the key level we continue to mention. 1969, 19.7 roughly, right? You can really look at this whole visual right here. They're just going all the way back right there is what you're looking at. Okay, so we're sitting in this range currently, and we've been here since basically the 26th. So you can see we've sat here from the 26th. We've been stuck in this range right here. We spent about roughly 8 hours below this going into after hours, and then popped immediately back in the range. So a bulk of the time has been here, right in this little range. Okay, that's that pocket we're sitting in. Now, I believe if we break to the downside out of 19.3 and hold, or break above 19.7, you get that clear-cut direction, clear-cut trend, meaning you break over, clear trend back into highs. You break the downside here, back down into lows, 19K likely. But I believe personally, this top side is your favorable bet. That's my opinion. The top side is what you're expecting right now. Now, why do I expect that? Because, yeah, if we look at Qs, I do believe you're lagging here. You don't look as good. Now, you're in a clear channel, right? You're still well above that pullback range that we had. But some of the indicators here are pointing to that upside. Now, I would say you're holding really well above your level here, 474. Great close here on the week. But we look a little bit closer. Look at the S&P. You're sitting at highs, ladies and gentlemen. You're sitting at highs, and this is what you wanted to see. Anyone that's just net bearish here, I don't know what we're looking at, really. You know what I mean? Like, people are like, okay, I'm bearish here. I'm looking at the downside. Well, you're looking for downside while you're at all-time highs. Yeah, why, right? So that's your previous all-time high back here from July, okay? And you're literally 2 points off of that range, 3 points right now. Yeah. You'll look good. So you start breaking above 564 here. I think you press into all-time highs there. But then you go one step further. I can let's go look at Dow futures, right? Dow futures YM. Okay. Dow is already there. Dow has already actually tested and made new all-time highs on the week, slightly, but you ended the week back at that range, right? And this is really important to understand what happened here. You came down your 200 SMA. We talked a lot about that back here in the beginning of August. You bounced. Same thing with ES. But the thing here is when's the last time that we saw the Dow kind of outperform the rest of the market, right? It was when we had the government shutdown, which was kind of avoided, and what happened with the banking crisis, right? You're seeing similar action. You can't look at the market from a closed lens of, okay, tech is going down, so the market's bearish. Well, tech really isn't. So this is XLF financials. We'll come back to this, but XLK tech. Tech is just consolidating. Now, you below the 200, I was getting kind of worried there, but you got back above it. You're holding up. And not only are you holding up, but look at where you're holding here on XLK, the tech ETF, right above your key level from May 23rd. It was your breakout point. And again, you say, well, why is this a level? Are we just making up levels? Well, let's look. You got you rejected here. You pulled back. You sat sideways. When you broke above this level, you proceeded to move up basically for about a day, 24 hours, up about, give or take, 7 points on the tech ETF. And then you made all-time highs, clearly, okay? And then you're bouncing there. Not are you bouncing 1, 2, 3, 4, 5, 4 hour, 20 hours of bounce action happening on the XLK level. So this is also pretty interesting to me. So I would argue that right now, which is a rare occasion, that tech is the lagging index here. So what I believe is you're seeing a little bit of a rotation out of the popular tech names into some of the names that are benefiting specifically off of what's happening with rate cuts that are coming very soon. Now, when we go back to XLF, now XLF is getting love here. Don't get me wrong. And you're at all-time highs. But XLF is nowhere near how XLK has run, right? So giving you just an instance, like you're playing catch up on some of these other indexes, right? So if I go to XLK, like you made all-time highs a long time ago. Like you're well above that level. We can all agree. Like you broke and you're 35%, your all-time highs are 35% away from your previous all-time high. Okay. I go to XLF, you're moving good. Don't get me wrong. You're moving good. But you're only 9 to 10% away from your all-time highs. So these sectors are playing the catch-up. Healthcare, another big name here, a Dow name, right? A Dow name that isn't heavily impacted by the Nasdaq. Previous all-time highs, which were right there back from 2022. Again, you're about 9% away, right? Well, look at something, again, in that same sector that's had a good run, like XLY. Consumer discretionary's had some decent runs, right? But again, a lot of these names are held heavily in the Dow, right? Consumer discretionary, I think you can look at something like, I think Tesla sits in that name. Amazon might sit in that name as well. I could be wrong, but that's what I'm looking at here. I'm pretty sure Amazon, Tesla. Those have been the bright spots. If you look at other names in that sector that haven't performed as well, they're kind of holding you back, right? And again, you have to look at what's really carrying some of these names, right? XLI, industrials, right? Again, breaking out, continuing. And again, why is no one talking? Everyone's saying, oh, the market's bearish. It's this, it's that. Well, is it actually? Like, is it actually? Look at XLI go here, right? Look at what's happening. Previous highs just back here, 2021, right? About 22%. Actually, pretty incredible how this is moving in comparison, right? So again, sectors that are lagging. XLK is the big one that you'll look at here and be like, okay, wow, that's performing like crazy, or has performed like crazy. But these other sectors are playing that catch-up game now, primarily because they're going to benefit maybe the most, or being held back the most based off of where rates were. And now they can kind of get back to growing as businesses as well. And that's the important thing that we're understanding what's happening here. It's because I think we kind of put goggles on and we're like, okay, guys, tech. And I love tech. When it comes to day trading, tech is your best friend. Like it just is. It's the most volatile, moves clean up and down. You get your percent moves, etc. I'm a big fan of tech. Don't get me wrong. But you occasionally have to take a step back and understand what you're looking for there. And again, when I'm looking at Qs and I'm looking at Nasdaq sitting in a range, I look at the other broad markets and say, okay, well, where could we be going? And again, these indicators are pointing in that direction. Now, step further. Well, why do I think rate cuts are definitely coming? Okay. Now, before I go into that, I'm going to tell you a few things really quickly. First of all, if you don't follow on Twitter, I recommend doing so. I post charts all the time, and I'm actually doing chart requests right now. I posted this before I just made this video. So again, make sure you go, and if you have a chart request, I'll go over it potentially. There's probably gonna be like at least 50 chart requests. So I'll try to do what I can. My favorite charts, I'll go over them. Also, too, guys, we don't always have Discord open, so it's going to be open. Just let you know, the spots are down below. We have free education on our site, but if you're interested, the waitlist will be open and you can join. Spots will open up. Make sure you go down and see if this is something you're interested in. We also answer questions just so you know, like what to expect. Is this just a signal service, right? What should you do from this? Is this going? Do I just blindly follow you? No. Like, do I have to put work in? Surprise, you do, right? Crazy world, right? So again, make sure you understand that. But as well, the link is down below if you're interested. That will open up only for the first of the month. So again, take advantage while you can. Now, back to the video. So again, if you're interested, guys, I'm posting a lot of this too on Twitter. So make sure you're paying close attention. So one thing I've been going over, I'm going to talk more about on Twitter, is your PCE data, right? I wasn't able to make a video yesterday. I had my son. It was just I had a lot of stuff going on yesterday. I have a newborn, been very busy, and some days I just won't be able to make content or as much content, right? But PCE came out today. Again, and PCE by a few analysts was expected to come out higher and a little bit hot potentially. But guess what? PCE comes out lower than expected across the board. Expectations, everything came in pretty good. Okay, personal income actually rose, which is kind of hilarious. But those are things that are happening broad-based. Michigan consumer expectations also came in better. This, again, further proves and pushes the agenda of rate cuts. Again, I don't care what you think about long-term of rate cuts or what's going to happen. Could it cause damage longer term? It could, right? But we do know as the data comes in like this, the Fed, we know what the Fed is going to do. Point blank. Period. That's the important thing of what we're looking at right here. Okay. And I think the data continues to support that rate cut. The question now is the 50 BPS or 0.25. I think a 0.25. I would not expect them to do a 50 BPS. Next up here, we look at DXY. Again, so a lot of people too, we jump to conclusions with the dollar. Now, I personally expected a bounce here. I did not expect us to go straight through this. This is the daily chart going all the way back to 2022. You can see this has been a monster level for the dollar. So you're bouncing at that level and the 200 SMA on the weekly. So that's where you're at right now. The 30-year yield, okay? I had to make this video twice, by the way. My computer like crashed when I was making it the first time. You're sitting at our level, 4%. You're bouncing off of it. I think rate cuts are what pushes this over the edge and gets to start to drop below 4%. Below 4%, we also know the market's going to get very, very hot, broad-based. The next thing here, too, is despite what's happening, despite the spike in yields, right, short-term spike. Guess what you're seeing on the time frames here as well. Guess what we're seeing? Mortgage rates continuing to drop. Yes, yes, yes. Our lowest point since roughly January 2023. That's where we're sitting at right now, 6.35 without rate cuts. What do you think is going to happen when rate cuts happen? Okay, again, now what's another thing that we can look at here as well? When we saw housing sales increase, right, and we saw rates drop for the first time really back here in November through January, February of 2023, guess what happened? The market spiked. So again, we do expect if rates continue to drop and if they start breaking below 6%, the housing market will spike, which will also fuel the stock market. Okay, very important that we identify what's happening there as well. I don't care if you think that there's fundamental issues. I agree. There's massive fundamental. I totally agree. There are a lot of fundamental issues out there, right? And I think that this is like putting a Band-Aid on a knife wound, right? However, short term is what we're talking here. Long term, we can go more into that. Okay, so those are the big things that we're looking at right now. Broad-based market. Hopefully that makes sense. Hopefully, if you have questions, you can comment down below, and I'll go over those. But I want to make sure that's understood. Now, diving deeper, what are we looking at opportunity-wise, stock-wise? What am I want? What I want to buy? Right? What do I like? Now, number one, Nvidia earnings. Okay, now. I didn't get a chance to go too heavy over NVIDIA earnings. You might have seen my previous video talking about how I still think NVIDIA earnings were fantastic, and I do. I think NVIDIA earnings were great. It's also interesting that NVIDIA did not come down to 116. I thought almost like for sure you would hit 116. You did not. That's wild to me. I think NVIDIA here is still a great buying opportunity. I think their earnings were fantastic, and I think once they fix some of their issues, even though they're still growing pretty rapidly, I think they're going to continue to grow and might even scale that growth even more. Their margins, everyone's saying their margins dropped. Yeah, their margins dropped from 76.4% to 75.8%. So they dropped technically, but yeah. That's pretty crazy. It's pretty good margins. So things to think about there. Now, personally, what's happening here in the sector, what's happening with tech. Now, NVIDIA is kind of holding us back, dropping a little bit. But let's look at semiconductors, SMH. SMH is still looking decent. SMH is kind of bouncing here, right? Bouncing, holding 239. You've had some nice pushes as well. I think SMH personally is signaling a buying opportunity off that key level as well. You're seeing names like ARM looking hot. ARM over 136. Get your dancing shoes out because I'm taking you out and I'm going to buy you something nice. ARM over 136. Now, looking a little bit further, now I'm going to go over the options I'm liking here on ARM, but I also give a special shout out to the sponsor of this channel, right? Guys, if you're interested in using a broker that I use every single day, they roll out their cash accounts. They have a lot of bonuses when you sign up. I'm not going to go all into those bonuses and sell. You can look at the link down below, check them out for yourself. But again, I use them for everything, stocks, options, everything in between, data. You can use them for your charting. I'm just obsessed with trading because I use them for so long, but you can still use them for your charting, everything in between, your options reports, everything like the unusual activity. It's all included, absolutely free when you use the platform. So make sure you check them out. The link is down below. Again, I love Moomoo just because like they've really worked with us as a channel and they've really kind of given us freedom, and as well as they haven't had a shitty product. That's been the biggest thing for us, is like not having a bad product, and really caring about the customers, caring about you guys as well. So that's been a huge thing for us. So I really do appreciate them. Check them out if you want. Okay, now ARM above 136. I told you, get your dancing shoes. Get your dancing shoes. I like the 150s on ARM for October 18th if you break and mount above 136. Right here, they're about $6. They'll probably bump up to around $7, maybe a little over $7. But I love them. You can go a little bit out of the money if you want, but I'm telling you, I just tell you what I like. Okay, don't shoot the messenger. Now again, ARM, what are you looking for? The mount above 136. You've been rejecting so far. That's why you got to see a break and a hold. Oh, crazy. That's what you're looking for there. Other semiconductors, I like AMD, but you're below 149. You got to at least mount 149.5. And then really, I want to see us above the 200 SMA. So it's a little bit risky there. Yeah, a little bit of a gamble, dare I say. Okay. AVGO's holding up pretty good above 165. I like it a lot. I like it. I love it. I would want some more of it. But I'm waiting, being patient above 165 there. Obviously, I love semiconductors. ARM is my favorite. So again, think about that. Now, I talked about the Dow. And something I want to talk about is Costco. We're Costco guys. Double chunk chocolate cookie. Costco is one of my big names here. What are you looking for Costco? You're looking for a mount above 896. Boom, boom, boom. This is a day trade opportunity though, shorter term. I'm not looking super long term on Costco. I'm not that big of a Costco guy, right? So if I go to Costco, bada bing, bada boom. We're going to Costco. Again, shorter dated, most likely, like September monthly contract. So I'm looking for the mount. Again, you can see they're a little bit pricier, like the 920s, the 910s. Those are the ones I like, and they're going to move good. Bada bing, bada boom. They're going to move good. You can see the action. Go look at that chart as well. They have the chart right there for you as well. But again, above 896, a strong hold. That's where you're looking. And again, you guys are like, well, why do you like these levels? Again, look at these rejections, right? This is the 2-hour chart. 1, 2, 3 to the 4, right? That's just right where you're at. So again, you want to make sure you get that confirmation. Healthcare has been a hot sector also, and I'm not going to sleep on it. Take your vitamins, ladies and gentlemen. UNH, United Healthcare. Look, United Healthcare, you can sponsor the channel if you want. I'm personally cared by. Is that what you say when they're your healthcare provider? I don't know. I got the silver plan, I believe. That's what we got. Not the gold. We got the silver. Okay, we do okay. Not too well though. But again, above 591.5. Above 591.5. You like it. You love it. You're going places. You're pushing to 600. LLY, Eli Lilly. Now, I'm not a fan of Ozempic, but I'm telling you, as an investment, I see the value. I see the potential. So you came into your key level, basically 966, 1, 2, 3. We actually traded this on the week, a short term, back into that previous high. You got rejected at 972. Above 966. Above 966. Let me tell you. Above 966, explosive. And I'm not talking diarrhea. I'm talking good. I'm talking good explosive. I'm talking good. Burst of flavors. Good, Trident. Juicy fruit. That's what we're talking about here on Eli Lilly. I love it a lot. This thing could really start moving into 1,000 in a hurry, all jokes aside. So make sure you're watching that as well. Again, those are some of my top names here. Now, tech-wise, you're like, Todd, I don't care about these boomer names. Give me the freaking tech. Give me the tech. Okay, as you push back up, the key level here, we traded Apple as well. Apple above 230.5 is into 232 with ease 232.4, give or take. So you're being patient here. You've also mounted 228. So I do love that. So it's also a buying opportunity off of 228. I think Apple is the big winner here in AI. I think they're going to continue to do well. And guys, if you're not paying attention, Apple's killing it with their iPhone production, right? Really quick, Apple iPhone production. Quick, Google search, 5 seconds. Bada bing, bada boom, right? Actually, bada bing, bada boom. I'm not gonna lie. iPhone. Oh my gosh, where's the news on it? I'm fumbling. We're fumbling, boys. Yeah, they're expecting pretty big volume. Okay, pretty big volume on production. I can't find the chips. This is gonna piss me off. Sorry, I'm missing it, boys. Sorry, wasted your time. But again, Apple. Again, look at what they're doing. They're expecting big sales with their new AI-based phones and the new platform with ChatGPT. Also worth mentioning, they're looking to get into the investing route on ChatGPT as well at their next funding meeting. Think about that. Big moves happening there. I see you, Tim. I see you, Tim. So that's what we're looking at there, guys. This video's already been made too long. I'm having another video probably coming out Sunday or Monday. I don't know yet, but have a good one, guys. I appreciate you. Comment down below if you have anything you want me to go over, answer any questions. Twitter as well. The link to Mumu is also down below. Check them out. I'll see you guys on Sunday. Have a good Labor Day weekend, 3-day weekend, by the way.